Good morning, everybody. Welcome to the Flow Show. It's a new week, and I'm back from the lurgy and feeling much better. And thank you to K-Man, obviously, for filling in for me last week and carrying the show on his broad shoulders. Morning, mate. How you doing?
Hey, good morning, Ryan. Welcome back, mate. Hope you feel a lot better. And my pleasure, of course.
Yeah, well, I do feel a lot better. Absolutely awful week, but the whole family stricken with the dreaded lurgy, but we're all getting over it now. I've got one boy still on the sofa with a temp, but it should pass pretty quickly. And yes, missing a bit of fun by the looks of things.
Yeah, it has been, mate. It's been moving in your absence. Quite a few things were happening. Market change of tone in the markets as well. Was talking about it, like this whole package of the past few weeks have been really changing people's mind about what is going where and what should behave how. And well, yeah, the overarching theme was, of course, a bit lower inflation, numbers slipping and sliding, but still very much in the Goldilocks scenario, dollar suffering a bit. Yeah, it's been moving quite a bit. Yeah.
Yeah. Maybe I should take the time off more often.
Yeah,
Any excuse.
everything went your way.
Yeah, I'm the new Blake.
Yeah. But the thing is that everything went your way, so that's the good thing about
Yeah,
having been off there.
That's a bit of pressure off. I mean, I barely looked at stuff last week. I had zero interest, but to manage what I've got. But we'll get into that in a bit. I can give you at least my updated view on the markets. On top of, I'm sure Kay's kept you all up to speed as well. Right, well, let's crack on through the headlines. China left their 1 year and 5 year LPR rates unchanged as expected, so no further help coming from that side of things. What they have done, though, finally, is move their fix rate. It's now, instead of being 7.17 as it has been for probably the past month or so, it's now 7.16s. So they managed to move it down one big figure, despite dollar China absolutely caving in at the moment. But they're keeping it to where the price is round about now. So they're not quite willing to let loose with the fixings just yet. They have also apparently drafted a whitelist of 50 developers they're going to give a big funding boost to, part and parcel of the news that's been ongoing for a while about keeping the property market propped up. Over in Japan, Finance Minister Suzuki says they are seeing the emergence of bright signs in the Japanese economy and that they have a once-in-a-lifetime opportunity to beat deflation. This is probably why they're so scared of actually taking the step before it's actually happened, but also starting to acknowledge that perhaps they can reach the trophy at the top of the mantle. What do you make of that, Kay? It's a bit of an admission, do you think?
Well, I mean, sure, yeah, once in a lifetime. Yeah, I think it's still one of the reasons why they are so slow in changing everything there. But has to be said that the investor is starting to buy the fact that Japan may also have turned the corner. What really stands out to me as well is that, and that I think came out Friday or so after I did the Flow Show, or but there was this line from Berkshire again, or Berkshire, Warren Buffett's investment company, who continues to issue some yen debt. They still firmly believe that Japan has turned the corner and looking to continue to invest. And then from Friday as well, and then this morning we saw it again. There's been some really thorough yen buying going on. Whether the whole thing has turned the corner, we'll see. I do think that for the time being, at least, unless the inflation in the rest of the world is collapsing back to below 2%, They should they should really take this window. And how long have we been saying that?
Yeah,
Already since Corona was still there, they should really take the opportunity of this window to really normalize policy a bit quicker than what they are doing right now.
yeah,
Suzuki must be very happy that the yen is strengthening without them having to intervene. The yen is three and a half big figures lower. Finally, yen crosses have given up a little bit the relentless race higher, but we are still there at lofty levels, right, in all of them.
yeah, exactly. And yeah, Pimco, another one who's apparently on the bandwagon as well now.
Yeah, well,
Apparently, they've been buying yen since 140.
exactly.
And I haven't seen too much detail in this story, so I don't know if they're just naked selling dollar yen. But if they were doing it from since what, August time ish, July, August, when it
Mm.
first went through 140, then who knows? You know, they've been sitting offside for a long while with a lot of carry. I should imagine they're probably doing some sort of funky hedged strategy where they're not getting stung on the carry, but or are they really just gone straight short?
Yeah, and that's the thing. If you do it unhedged, then you're looking at what is it? Let me quickly perhaps check it. But if you do it since August, you've been short dollar yen for about 3 months, and then you look at the where is it? The forward rates. You'd be looking at in 3 months' time, you've already been paying more than two big figures away
Yeah,
in funding. So I trust those guys are kind of hedging against other stuff probably. Um, but yeah, I mean it's a bit like the Chinese situation. Things get well, it's different in the economic side of things, but then at one stage investors start to turn around saying like, okay, we may have seen the worst. It's a little bit like we've seen in the Eurozone as well, but especially in China, where Chinese yuan is finally starting to respond to something. Well, the yen is doing now the same kind of thing, albeit they have to be a lot more careful how they go around, as you say, and as we have been saying with their carry. I mean, if you have to fund naked long yen positions, it's going to cost you money, right? So they probably have other stuff in place as well.
yeah, I should imagine so. But that's what apparently they've been doing, and now they've decided to tell us all months after they started getting into it. So it's always a healthy reminder that when these big boys tell you they've done something or they are doing something, they've likely been in it for a while anyway. And you jumping on board just gives them some extra profits in the bank. But anyway, moving on from those guys to one of our favourites, the Bank of England. Beary's Ramsden says that he would not rule out having to respond to evidence of more persistent inflationary pressures by raising the bank rate further in the future. Sees evidence of continued upside risks on inflation. This is really what I've seen so far and read back on the message that central banks are going to be screaming from now, probably till into the new year, I should imagine. And the ECB are the same. And that message is going to be that they're not ready to let go of policy just yet. ECB's Holtzman saying they still can't call an end to rate increases and won't cut interest rates in Q2. Market rate pricing is speculation and arbitrage. ECB's Nagel says no reason to rule out a moderate increase in the mandatory reserve ratio, and alluded to that previously had been up at 2%, had been applied in the past. So it's something that's going to form discussions at future ECB meetings. Says it's also not clear that we have seen a peak in interest rates. It would be unwise to start cutting rates too soon. ECB's Wunsch last week said the ECB may have to tighten more in the case of an oil shock. We need to be comfortable we're going to 2% inflation before cutting rates, and the ECB should stop bond reinvestments as soon as possible. And then popped up again this morning to say that to bet on rate cuts risks prompting a hike instead. Markets are optimistic to rule out further hiking and rate, but said that rates should stay unchanged in December and January. So these guys are some of the hawkish lot, but they are facing a fight now in the rate cut trade. They do not want the market going too far on rate cuts, which it might be on its way to doing. 2 weeks ago, we had two hikes, 225 pip cuts priced for the BOE, roughly the same for the ECB, a tiny bit more for the Fed. As of the end of last week, we were pricing pretty much 100 basis points of cuts for all three of those banks. So you can see we're stepping up the cut rhetoric, and this is going to be what central banks are going to need to fight next, and they are doing with their comments. The Fed are the same. Fed's bar says they're likely at or near the rate peak. Daly says it's too early to know if the neutral rate has risen. Collins says the Fed is positioned to be patient, but says she wouldn't take additional firming off the table. So, as we said, this is what they're going to be saying and talking about. A bit of data to look at from last week. Coming into this week, we had some PPI out from Canada, which is looking fairly soft, down 1% on the month, more than expected year on year. Raw materials as well, showing similar big drops there, more than expected. So inflation pressures waning further there in Canada. This morning we got some PPI data as well out of Germany, if I can find it, and there we go. Came in as expected, really, down 0.1% on the month, down 11% year on year. Not as much as it was, but still we're now seeing negative numbers wholesale coming in. So yeah, inflation is still coming down. We'll see whether it picks up into the winter on possible gas supplies and stuff. And speaking of that, European gas markets jumped this morning over this ship that got seized in the Red Sea this weekend. It was a Japanese flagged or chartered vessel that was seized, a vehicle carrier, I believe. But European energy markets have got spooked that this potentially signals problems in that area, and that gas supplies or ships carrying gas may be targeted or get hit with similar types of things. And so those nerves have rattled gas markets early this morning. Might be a bit of a 2 + 2 = 5, a bit overkill, but that's going to show us how jumpy energy markets are going to be coming in to the latter part of the year, particularly still with this stuff going on in the Middle East. So back to Friday, Mr. Data, the housing starts and permits, and yeah, the data's still not all collapsing. We've seen. I checked back last week. We had the NAHB housing market index dropping significantly to 34 from 40. That was for November numbers, so that shows potential problems still there. That number's been on the slide since it bounced a few months ago. But then we get starts and permits beating expectations and blowing through last month's numbers as well. So, just when you think this might be a time you see something turning, the US pops up and says, oh, no, you don't. Things are looking pretty good. So still with the soft landing elements going on in the US, which is going to make, as I say, make it tough for the Fed to see the market getting too dovish about rate cuts when the data really doesn't suggest the market needs to be. Kay, you got anything across the radar or anything I've missed in my absence you want to point out this morning?
I mean, just to add a couple of words, this vessel that's been taken in the Red Sea is actually, it's chartered by that Japanese company, but it belongs and it's like owned by an Israeli businessman. So it clearly has to do with the problems in Israel as well. And it does seem, though, that under international pressure, there may be a window of calm coming, maybe, or for to let more a humanitarian aid in the country, and this freeing of some hostages also. Of course, that's not going to come for free, I guess. So we'll have to see. But perhaps that is also a little bit behind what we still see as kind of risk positive, together with some Goldilocks scenarios still ongoing. Yeah, the other thing that I picked up was Friday around the close. There was, well, I mean, some chatter around what Moody's may do with Italy's rating, and they actually upped the outlook a notch from negative to stable, and they also upped Portugal to A3 with a stable outlook. So it does seem like, to a certain extent, Euro took a bit of comfort from that as well towards the close. But and for the rest, I think you have done everything. You have said everything. There hasn't been much more market moving, let's say, out of the news headlines this weekend.
Yeah, the only other thing was that there's talk about OPEC Plus maybe deepening cuts at their meeting on the 26th. That's coming from various sources. So something to keep an eye on. Talks that the Saudis will extend their current set of cuts into the spring, but there may be a little bit on top from OPEC Plus, other OPEC Plus members adding to cuts there. Not that it's influencing oil prices right now, which remain looking very tepid. There we go. Been a bit of a bounce since Friday, but or since last week.
There's been something. Last Friday there was a not last Friday, last week, end of last week. I think it was on Thursday or so. There was a roll of contracts which seemed to have spooked the markets a little bit, and that was this sharp move lower, also on the Gaza thing, perhaps with the hostages, but that was the overall move, let's say, less risky. But then afterwards it spiked into the new contracts era. So one and all may have to do with that last spike at the lower, and then the move back up towards the end of the week, I've read. So and also Mark was commenting on that in the room. On Thursday, Friday. So we're basically back to the levels where we were before that last spike lower.
And even if you blank out all that move there because of the roll and whatever, it's still not looking overly strong.
No, people say that we may have seen a bottom there in the low 70s. But to call the bottom, I think SPR has to come, the US SPR has to come out and say that they want to buy oil around 72 or below. Then it's probably going to go straight back to 80, 85 here. But it to me as well, mate, it still looks, and if the winter is relatively mild, as meteorologists may expect or are expecting, I don't see it like ramping back up to rates where we were before, like up to 90s or so. I just don't see it right now.
Yeah, unless it kicks off in the Middle East full scale.
Exactly. Of course.
I don't know what all those $100 oil coolers are going to do themselves. They'll have to revisit their forecast, I think, as per usual. Right, well, let's take a look at what's coming up this week. Not a lot out today, not a huge amount this week. We get some more housing data from the US, CPI from Canada tomorrow. Please ignore these timings. They're out by an hour, and for some reason the changed time zone function isn't working on this site, but I only use it as a guide for the overview of the week. FOMC minutes tomorrow shouldn't be anything big. We've heard from these guys 100 times since, so we should know their positions now, but you never know. There might be the odd gem in there that we haven't heard about but usually these days it's not a big deal. Tomorrow we've got Bailey also appearing, I believe, at a Treasury Committee with his bods, so we get to hear the latest rubbish from those about how they've beaten inflation and given themselves a pat on the back and so on and so forth. On Wednesday, for those who are not in the UK, we have what's called the Autumn Statement, which is like a pre-budget budget statement thing from Chancellor Hunt. He's going to be wafting on about a load of how good the economy is or how bad it isn't. Excuse me. He's also potentially now found the magic money tree blooming late in autumn at the bottom of the garden. So apparently there's going to be some tax cuts discussed potentially. I wouldn't think this is going to be big for the pound. This is going to be more about electioneering for the election next year. Not that it might matter what comes out of this statement, because if the party loses next year, then they will undo a lot of what he does anyway. But just keep an eye on that one. From a trading point of view, look for anything that comes from corporate tax cuts or something like that, something that might just give the FTSE a move one way or another. But overall, for the quid, I shouldn't think there's anything in there unless market decides to go Liz Truss again like last year and hammer in for something or other, and the IMF pop up with a scathing attack and the market takes notice. But
right. It's good that you're back, Ryan, because the fact that I've seen a couple of commentators. Of course, I mean, everybody has they have to write stuff, right? But it is kind of taken by some economic watchers as Ken Hunt close that 20-point gap that the Tories have to crawl back versus the lorries in the outlook for the elections. Do you think it really has the potential of doing something like that? In which case we may actually see some, as you say, FTSE moves, which probably going to cause a few currency moves as well. But do you think that there is this potential in this budget speech to start really moving things around?
no.
Okay. Yeah, all right. I just wanted to confirm, because I don't see it.
Listen, this guy could offer each of us gold bars at this Autumn Statement. It still wouldn't change the fact that they're likely to get a shoe in at the election. There's not enough that he can do in this thing to make a significant difference. Yeah, he might knock half a p off income tax or give a bit of concession to corporate taxes, but no, he knows he hasn't got the room to do that. Inheritance tax is the big campaign swinger in this one, but these things always go the same way. Okay, he'll come out and say, things. I don't expect him to say things are great, but I more expect him to say things aren't as bad as people forecast, which is true. But zero growth, minus 0.1 growth or whatever, plus 0.1 growth is nothing to boast about. But boast about it they will, that things aren't worse. And whatever he gives in tax breaks on one hand, everyone will get into the detail. And a half hour, 20 minutes, 10 minutes after he's finished, it'll be ripped to shreds by the press and the opposition. And they'll tell us, he's giving you with that hand, but here's what he's taking with the other hand. That's the way these things tend to go. But is there really anything significant he can give us that will help close the gap in the elections? I don't think so. I don't think so. As I say, he could offer us all gold bars each, and it won't make a blind bit of difference. It's too. I mean, you've seen it in the press. It's too ingrained. The negativity towards the Tories is too ingrained, I think, to turn around.
Yeah.
But a year is a long time in politics, as they say. So you never can say never with politics. Look at next year; we could have Trump back in the hot seat. So that's as crazy as things are. But I'll watch it with less interest, and maybe we'll have cheaper beer by the end of it by 5p.
Yeah, all right. I just wanted to double check. I don't expect much of it either, unless he goes like really, really heavy on wanting to create a Silicon Valley in London or something. But yeah, okay.
You know, you never know. You never know what they might pull out of the hat. But as I say, whatever he does pull out of the hat, there might be a fanfare about it, but then it'll get shot down to bits. How are you going to pay for it? What's it going to cost? When it's going to come? And blah 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 blah. So, yeah, I'll probably have it on in the background until I'm bored, and then I'll switch it off and put a cricket on or something. But anyway, moving on, we've got durable goods later on Wednesday as well, and keep an eye on those jobless claims numbers. Then we get the flash reading of Eurozone consumer sentiment, and we get US consumer sentiment as well. This is the conference board one, the main one. So we'll keep an eye on that for inflation expectations there again. On to Thursday, it's PMI day. We start getting all the PMIs from around the globe, obviously in Asia, early doors as well. Friday, we get Japanese CPI. I think that's going to be a pretty big number there to see if they keep things going over there, whether it's going to still pull back in the latter part of the fiscal year, as Ueda has been telling us it's supposed to do. It's been a bit stubborn, so we'll see what happens with that. Canada retail sales later on the day. That's something maybe for the loonie before we get into the S&P Global US PMIs for that one. Anything on there that's tickling your fancy, Kay?
Not really. You know what is going to be on my radar this week is we have another round of US Treasury issuances coming in. And so
year haven't we got coming?
Sorry?
Is it a 20-year we've got? That's going to be the big one.
We've got this 20-year upcoming, which is actually today. It used to be a non-event, this thing, but now it's all of a sudden a big one because of the miss that we had on the 30-year, which actually could have been purely technical now after the fact, because there was something about Chinese being hacked and they couldn't even go to the auction. So I think the market got spooked on the day because there was like a very huge tail, but it seems like quite a bit had to do with some technical issues as well. Yeah, for the rest, there's a lot of bills on offer today. I mean, we've got what is it, 3 months and 6 months coming. We've got a bit over 1 month tomorrow. Yeah, there's quite a bit going on. Tomorrow we have a 10-year as well, and a 1 and a 2-year as well. So and it's all concentrated at the start of the week. So that's going to make, I reckon, things a little bit interesting, because we will know very soon whether the market decides to go there, whether they would use more of those money market funds or RRP funds to go to auction, because if the auctions run well, that should put a little bit more downside pressure on the short end yields, at least to start, and then on that 20-year or so. So yeah, those are things that I'm going to watch, because it could be, if they fail or if it don't get anything interesting showing that the market is going to auction, it may put a little bit of a bid under the dollar, perhaps.
Yeah, cool. Thank you. Right, let's take a look at what's going on in markets. I'm probably going to do a bit of deferring to the big man, seeing as I was out. But it looks pretty clear what's happening in dollar yen. We're having a little bit of a crap out at the moment. We couldn't take out the prior high. That was around about the October high as well. So again, we've still got potential for a huge double top to come in there, just to get on the wider so you can see that. So that is looking quite significant, that high up there now. We're breaking down through the levels. It's difficult because we've had such a strong move up. You often, when you get a grind like this, when you get a bit of a blow off the top. It's going to be fairly volatile. That's what it's doing. We've got various levels down below here. 148 is probably the next one to keep an eye on. You know, we've gone through the minor levels here. So 147 is still one of my big ones that I'm going to be watching personally. If we are going to really attack this trend, and this is only since July, the summer part of it, then, you know, 146.30 is going to need watching. If we, I haven't got it on this chart, but if we're going to be taking on the whole year's trend here, that fib comes in around 142.40, I think, off the top of my head, just by a rough judgment and another chart. So, you know, turning around trends, the fibs are important to me, a bit like I'll show in euro dollar in a minute. They show you whether this is real or whether it's not. So 147 and then that 38.2 fib are my key levels below here. 150 has already shown up as resistance, which is pretty important as well, because this is still acting a big pivotal line here. So any rallies to here are likely for now to probably find some decent sellers. Anything near that 150 is probably going to get hit pretty hard, and it's going to keep this momentum going. So we'll see what it does for the rest of the day. We've already done quite a few pips. No finance ministers are going to be jumping up and down for this one, moving 200 pips south rather than north. So they'll be pretty silent about that. Euro dollar continues to grind. So this one, we've been monitoring this for quite a while. Got up through the 30 fib, 38.2 fib, got up through the 50 fib. This is just the line in the sand. We are definitely looking, obviously, like this trend is now flipping around. What I would say is, again, this has been a bit hard and fast. So if we do run into a bit of trouble, and maybe that trouble is around 110, then you may be looking for a bit of a steep pullback. It may not just be a 10, 20 pip pullback. You may get something a bit more on top. So just be prepared. You know, the higher and faster it goes, the more chance you got of a steeper pullback. But if it starts holding the levels as it is, and we can come down to the short time frame, it's holding the break points. This was my zone, as you know, going up. We had to move through, couldn't hold it, and then boom, 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 support, 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 and then finally we get a proper breakthrough. So again, we have some intermediate levels. 109, 30, 40, call it. That's another sort of on-off level, historical level that's marking the top. That might be where we run into a bit of trouble, or we do take a crack at this 61.8 fib, get over that, and we're all singing about 110 and what's to go on there. Support is holding around the 109, 109.10 area. Again, an important signal to be aware of. If you're going to get these breaks, the breaks need to find support. So technically, it's doing that. So a little bit of a tight battleground here between 109 big figure, 109.10 and 109.40. If we knock our head against that, then maybe we get a little move down and it comes back down. 108.70 is maybe this trend line. That's been a bit of an on-off trend line, really, going back, but it seems to be having a bit of a say in things. So the areas of support are needed there. I have taken, I took a little bit off my long at 109 late Friday when I saw it. Still long from down here in the 105s. So still happy to run that. Just a bit gutted, as I'm sure you are, Kay. We all jumped in the 107s and then got tipped out, didn't we? These moves under. And I didn't get back in. I don't know if you jumped on the bandwagon at all.
No, mate. No. Well, I've cut it now as well. I'm relatively happy with what I did on the dollar yen. But no, actually, I'm starting to counter trade this move in the euro dollar.
Yeah.
I do think that somewhere between, you've got the 109.60, there's the 109.40, and then we have that 110 psychological level. I'm not saying that they are not going to take the stops out of the way or so, because it does seem, you know, the end of the year is now upon us for the longer term book managers, they do seem that as I was saying last week as well, the hedge fund market was underweight, not like short equities, just underweight, completely underweight apparently in equities, and they needed to catch up, and this whole package that we have seen is changing a little bit, but I also always look at those differentials, and those differentials are not really showing me why euro dollar should run much further. But okay, I mean, I've been wrong in the past as well. Let's see what's going on here. For the rest, if when we look at the yen, and if you want, I can take the screen.
Yeah, go ahead, mate.
Okay.
I'll just end it off. Here we go.
All right. Just what I was saying already last week, a couple of times, is that the market has taken this whole package of what's happening in the US, and finally the yen started to respond as well. It's funny that the day that PIMCO comes out saying that they bought yen, the market is continuing to push, but it started before around this zone here. We've had this first leg lower of the dollar yen, then a bit of a rebound, and then started to come off again. It has those, as I was saying, it has those looks of what happened in November 2022, which was here. And that was when the US CPI came out. And around the same time this year, we are starting to see the dollar yen again starting to come off. Yes, we had interventions here, but independent of those interventions, we had the turnaround in the CPI in the US, and we have seen a bit weaker CPI numbers. We have seen the whole package of those data. We were talking already before your absence, Ryan, about the package of the data that we want to see for the more medium-term investors, for the more medium-term players to come into the market. And it seems that they are now seeing what they want to see. And I'm not saying this is going to go all the way back down to 128 or 100 and even 137. I don't know, but it has a whiff of what's happened last year in November. So we have to be a bit careful here. So yeah, I had my 150.5 call is expiring, put is expiring today. So I pressed the button a bit early to cover the rest today because I wasn't sure whether it was going to continue, but we are back into the daily cloud, and the daily cloud top is at 148.5 today. All right. So this is a number that we need to monitor a bit for the rest of the day, I guess. If it continues to go lower, then we're talking about 146s. Even the bottom end of the cloud comes in around 145.80. Trendline support 145.75, call it. And then what we have stuff in the 146s as well, right? I think here 146.20 and then here that 146.5. This is going to be your new zone if it continues to come off. Your new zone to monitor. Very big support zone, I would say, coming in there. If that wouldn't be enough, then we're talking about perhaps even here 141s or so, or 141s. But I'm just saying it has the kind of looks of what happened last year in November, okay? And then we had this big move lower into the end of the year, acceleration on the start of the year, and then we started to go the other way around. So just keep in mind, history doesn't necessarily repeat itself, but sometimes it does. And timing wise, this is looking a bit similar as well. All right. One that I mean, Ryan already showed those levels, 109, 40, 60, and then you're talking about, I don't have the 110 here, but I think I have it on the wider frame as well. I do think there is a bit of, no, there isn't. Yeah, here it is, but that's already well in the 110s. I'm not sure. I'm looking to add just a little bit into 60 and then see what happens if we can find the top there for now around at 61.8. But the one who is which is interesting as well is this cable. If you look at it on the daily, I'm not usually a big follower of moving averages, okay? But if you look at the daily, the 200 moving average comes in at 125.05. Prior top comes in at 125.05. Today's jump that we had an hour ago stopped at 121.10. That was right into the fixing. So it does seem that models do get triggers into hourly fixing, so we need to keep an eye on those. It did not happen around this one at 11 a.m., but it happened really at 10 a.m. But keep an eye on what's happening just above 125, because you have those prior highs, prior low, and there's a bunch of them, okay? And that's all happening towards somewhere between 125 and 125.40, rounded up to 50. 125, 125 and a half, I think is a zone big enough to really keep an eye on in the cable. Yes, the 50% of the move lower only comes in at around 126, the figure 125.95, but we have seen zones of activity just around 125 and into the mid 125. So I would really keep a close eye on what's happening here, because if it's enough, then we could already find a little bit of a reset to a bit lower levels. And I would say that on the downside, if you look at it for what may happen over the week, if we do confirm a top here, it's going to be a bit of activity. I reckon 123.80, 124 the figure, as we've seen on Friday before the move up. But then I think we're really looking at now in the more medium term, I think this zone here, 123, 122 and a half, 123, 123 and a quarter, that should really start to hold if cable has to push further. That is my view on the cable right now. We need to say something about Canada. Canada, despite this $5 rally from the top, look at this. Dollar CAD is really not participating much in the decline. Yes, we had a big figure decline, even nearly two big figures from the highs. But then if you look at the euro dollar, did 4. If you look at the cable, did 4 as well, and dollar yen even came down 350 points. And dollar Canada is still not participating. And this, I reckon, is because a bit of the proximity of the US, for one, and a bit of nervosity around what the economic situation in Canada is right now. Also, their housing market has a little more issues, and as we have seen, those price indices are coming down. It's going to be interesting to see what's going on just here, 136.60 to 136.40. Keep a close eye on this if or when dollar CAD comes close to that. And on the other hand, if you look at stuff, okay, I can go through 75 pairs if I want, but Euro CAD has been pushing higher as well. But we are coming into a bit of an extension zone here, just above 150. For the rest, there isn't much to see here, but just keep it in mind. Just above 150, there may be some resistance coming in here as well. But if you look at that testifies really of how weak your CAD has been, and I'm very reluctant to counter trade it, but I'm just noticing it and telling the people to be a bit careful. If you are short Canadian dollar, there may be some reason for it to correct a bit after all. All right. We have to talk about this dollar China, right, Ryan?
Yeah, it's having a proper carve up as well, isn't it?
Here, I said I would love to see this move back up to 733, 32, 33 to go short. It never did a bloody pip more. I was really too conservative on that one. But finally, the market is turning around, and we warned a bit against that, and I certainly did last week, warning against the fact that to be short CNH, because the investors were showing signs of wanting to see the turn, or the worst happening, the worst being behind for China, and really the market responded to it, and now we are. The PBOC won this fight against the market, because they were keeping their fixings always in those 718, 717, 718, and now the market is coming back to their level. So as Ryan already said, it's now going to be important to see what the PBOC does. If the PBOC is happy with what the market has done and is happy with their victory, they're probably going to keep their fixings along here, even if the dollar China overshoots, let's say down to comes back to levels 711, 712. They may start to keep their fixings up here. So that is probably going to then tell us that they're happy. But in the current context, I would be really surprised if this thing moves far above. I'd say call it 723, 727. I think any move back up there is probably going to be met with renewed selling. That is what I think on the China right now, and we could be in for a bit more of corrective activity on the Chinese yuan, even before the year is over. That's my view now.
Yeah, I'll second that, mate, before you flick it off. I think down towards 710, 711. That's a big old zone down there. It's a 38.2 fib of the move from 669.
Yeah.
So that's going to be a big area indeed.
Big level there.
Yeah, I think if it holds under 716 here, gets under and holds under 716 here, then we're probably heading there.
Alrighty.
I've got a question for you, actually, because I'm just looking around and catching up. The Antipodeans seem to be a bit lagging. Aussie dollar, Kiwi dollar.
Which ones?
We're seeing all of this looks a lot US dollar led.
It is dollars,
but those seem to be a bit lagging behind if you compare them to cable and the euro. Not quite willing to go with it. Is this a commodity thing? Lower oil.
I don't think so, because if you look at the euro Aussie, we are lower than the peaks that we've seen last week, and the euro Kiwi, especially as well, where the Kiwi was actually looking a bit weaker. It actually is gradually catching up here. But if you look at, for instance, percentage-wise, Ryan, this is roughly the same percent as what we have seen in the euro dollar. If you start from 106 to 109s. Call it 3.5%. This is also 3.5%. 3.5%. So
I guess I'm just looking at the levels. It's the euro went up to decent levels, and this one's still not. I think we haven't even hit the 50 fib of that move from when July.
It's not far.
No,
it's not far. It's around here, 65.85. But yeah. If you look at the global, the more medium-term picture, we're still very much in this in a down sloping channel, right? And that doesn't come in before 66.80. So that's another big figure. In Aussie terms, another 2%, which is not nothing for sure. Brings us back to the question: is the dollar dead yet? It may have a temporary illness. I would say.
COVID, like me.
Yeah, exactly. It's got caught by COVID, but I do think that as I've been saying, and on the show as well, I've been saying it here. We cannot forget that sometimes those bigger asset managers, those bigger money managers, are really starting to manage their end of year books and what they want to do, and window dressing and whatever, however you want to call it, actually from mid-November. And it does seem that last week was an important week. So for this, and so now we need. That's what I was saying as well on F.A.C.E to close the week. Now we need to see this week as a confirmation of that picture. If we do get the confirmation of that picture, then we may see more weakness of the dollar going into year end, and still, does it kill the dollar? I don't know. But if you look at the global picture, and if you especially look at stuff like the yield differentials, they are not telling me that we should be moving a lot higher in euro dollar, for instance. So there is this thing about, could it be that we are going to rather stay in those bigger ranges in the euro dollar and in the cable, for instance, but that the rest of the dollars are going to move around it, such as dollar yen, such as dollar China, and perhaps then the commodity currencies, which are going to perhaps catch up, which would then translate in perhaps a lower euro dollar, lower euro Aussie, euro Kiwi, perhaps a lower sterling Aussie, sterling Kiwi, and things like that. That is kind of where I am at right now, because I don't see why cable and euro dollar. Oh no, this is not right. What is this? No, I did something wrong here. Ah, yeah, I see what I did. You see, if you look at the differentials on these are the sterling, it does not really support a move much higher in cable. But already, as said many times, the differentials are not the only thing that move the markets, and the dollar market is obviously the biggest one. So people are going to react more on dollars. But even if you look at sterling, at the yen, JGBs, they are already way off the 1% mark again. So
Yeah.
are we going to see those big move and falls? Is still my question, and perhaps those U.S. Treasury issuances at the start of this week can give us just a hint of an answer to that. Let's put it that way. And that is, I'm going to give it back to you for today, Ryan.
Thank you very much, mate. Yeah, good to be back. Good to be back in the saddle and getting my teeth stuck into it. I really couldn't be asked to do anything last week. Oh, dreadful. But now I'm all rip roaring and ready to go. So yeah, lots to happen. Keep an eye on things going on, folks. Watch that data that's coming over the next few days. Obviously, we'll catch up with you guys and girls tomorrow. Thank you very much for supporting us here in the Flow Show, and again for supporting Mr. K-Man last week. Have a great day, everybody, and we will see you all tomorrow.
Thank you, Ryan. Have a good day, guys.